Hey Abby, today we are talking about rebalancing. The S&P and Nasdaq closed at new record highs this week. In fact, all three major US stock market indexes rose, setting all new closing records. I keep hearing about new records. In fact, for the S&P, it was the fifth straight month of gains, up 14.4% from the first half of the year. You know, we're well into Q3 right now, but as I keep hearing about the stock market and everything else, is now a good time to be rebalancing?
Rebalancing is a really important part of managing risk and making sure your portfolio stays balanced. So, typically, when we start out with investing, whether it's a 401k or investment account, you pick an allocation that you're comfortable with. And then over time, there's sort of a shift that happens depending on which asset class outperforms other ones. So,
Right.
right now, most stocks have had an incredible run. So your portfolio might be a little bit out of balance and might be a little bit riskier than you're really comfortable with.
Mhm.
So instead of having it being a calendar date specific rebalance every year, what we recommend is anytime your portfolio is out of balance by maybe more than 10%, I would go ahead and rebalance. And then there
Okay.
are tax consequences to consider too on certain accounts.
Okay, well, let's talk a little bit more about that because that's clearly very important.
It is, yes. So anything that's outside of a retirement account. So retirement accounts being 401ks, Roth IRAs, 403bs, those type accounts. That's all in the wrapper of a retirement account. So you don't have to worry about tax consequences there until you take it out.
Right.
With investment accounts, brokerage accounts, they're sometimes called, anytime you sell something at a gain, there's going to be what's known as capital gains. It's either going
Right.
to be long-term capital gains or short-term capital gains. Typically, long-term capital gains are going to be taxed at a lower rate than your ordinary income. For most people, long-term capital gains is a lower rate.
Mhm.
Short-term capital gains, on the other hand, is going to be your ordinary income. So just be careful when you're starting to sell things in a non-retirement account, and know what your tax consequences are going to be, or talk to your advisor about it.
Yeah, it's complicated. And Abby, you brought up this really interesting graphic, which shows the effects of rebalancing versus not rebalancing. What am I looking at here?
Yeah, so this is a chart put out by Fidelity that shows a portfolio that started out at a certain allocation in December of 2000, 10% cash, 40% bonds, and 50% stocks. And then in December of 2020, if it wasn't rebalanced at all, the allocation shifted to 67% stocks from 50, 29% bonds from 40, and 4% cash from 10%. So this is somebody that started out with an allocation that they were comfortable with, that fit with their risk tolerance and their risk capacity, and now it's really out of whack.
Hmm. Okay, let's take a closer look at asset classes year to date, excuse me, because I think that this is interesting. Again, oil top of the list, Bitcoin, commodities, and then here we are talking about stocks again. So Abby, like you were just talking about with percentages being out of whack, when you look at this, what are there any red flags or any questions we should be asking ourselves?
Yeah, I think that people get into trouble, and it's been studied actually by Dalbar, that people tend to try and chase returns because they'll see, oil and Bitcoin and all of these asset classes that, at least for right now, are blowing it out of the water, and they
Hmm.
start to chase those returns instead of staying with a diversified portfolio. And what tends to happen is people unknowingly buy high, and then they are outside of their risk tolerance and things get volatile, as they always do, and then they panic and they sell low, which is
Right.
the opposite of what we really want to do. So talk to your advisor, or if you're with a 401k, they might have somebody that can help you, and before making a decision like that, because
Mhm.
really what's most important is sticking with a diversified portfolio. And as you saw, Bitcoin there has had an incredible run over this past year. So you could have started with a couple of thousand, a year ago, 2 years ago, 5 years ago, and it could be tens of thousands now. So it might be a time to rethink how much you have in terms of percentage of your net worth, in those certain asset classes.
Yeah, I call that, Abby, Bitcoin FOMO,
Yep.
S&P FOMO.
Yep. I mean, it happens to all of us. Just
Yeah.
try not to give into it too much.
Right. All right. Well, as you mentioned, this is really complicated. There's a lot of tax consequences to consider. So if somebody wants to get a hold of you to have you walk them through their portfolio, how do they get a hold of you?
Yeah, absolutely. So you can give us a call, 678-442-0255, or you can visit us at theretirementfamily.com. You can submit a message to us, let us know kind of what you're looking for, and we'll set up a consultation to chat with you for about 15 minutes and see what we could potentially do for you.
That's great. Abby, thank you.
Absolutely. Thanks, Erin.